Hey, what's up guys? Welcome back to the channel. My name is Frank Mularcik, and in this video we're going to be talking about my M1 finance portfolio, which it's full of these growth stocks and I'm not so sure about it, but I definitely want to diversify my investments into some of these more exciting growth stocks. A lot of my investments are pretty boring, I would say, but I just figure it would be good to get in some of these growth stocks. So that's what I've been doing over the past few months and been showing you guys, and that's what I'm here to do today. So let's just get right into it. So as you can see here, our account value is right around $220, and we're down about $20 all time. I started this right at the beginning of the year, at the beginning of January. So that's about 11.38%, which is not ideal to see, but I did want to mention, maybe just to make myself feel better, but I have gotten this referral bonus once that they have, which is worth $30. So if you kind of consider that $30 offsetting the $20 loss, we're kind of still in the positive, but maybe I'm just trying to make myself feel better. So if you guys do want to get started with M1 Finance, I'll leave my link in the description, and you will get $30 and I'll get $30 if you deposit I think it's $100 into an account. I think if you open a Roth IRA with my link, you do have to deposit $500, but normally that's an account you're going to be depositing more or trying to max it out. So that shouldn't be too big of a problem, I don't think. So looking at my specific holdings here, you can see this ARK ETF, we're down about 25% on that, and that's honestly a big drag on our portfolio because initially I had that set for 25% of the portfolio, and just not really just because it went down, just I had thought about some stuff some more and just lowered it to 10%. So hopefully that shouldn't be hurting us as much in the future. And then we have VGT, which is an information technology ETF. We're pretty much just breaking even on that. That's about 15% of the portfolio. Then Google's been doing very well for us. We're up about 30%. It's about 8% of the portfolio. And then Amazon just about breaking even. That's 8%. Shopify is down 6% for us, which is about 8% as well. And then PayPal up about 2%, but I mean it's pretty negligible, which is 7.5% of the portfolio. And then Tesla as well, it's down about 25%, which is 6.5% of the portfolio. So this is one, I do believe in Tesla a lot as a company for the long term, but the stock, it's just overvalued, and I want to be an investor, and maybe it's just something where I should have said, well, I missed the boat on this one, I'll sit it out. But I do think they're still going to do some pretty great stuff in the future, and I do want to be a part of that. So that's why I'm investing, even at these inflated prices. I think it is a good company. And then Visa, I like Visa a lot. They're about 6% of the portfolio though, and they're up about 6% as well. Adobe just about breaking even at 4%, and then MasterCard up a few percent, 4.5% at 4% of the portfolio. And then Square is down about 9%. That's only 4% of the portfolio. And then here's where we get to the big losers, Spotify and Jumia. Spotify's down about 36%. Jumia is down over 50%, and both of those are about 4% of the portfolio. And I have lost a fair bit of money on Jumia. If we look here, basically when I was first buying the stock itself, I think the share price was around $60 a share, and right now it's $26. So my average cost is $42.80. Just because of I've been averaging down automatically through M1 Finance, so that's nice, but hopefully I can get it lower and then we see some sort of rebound, because I sort of need that on Jumia. So that's how the holdings are looking. If we look at the activity right here, since sometime in April when I updated you guys, obviously I deposited my $25 at the beginning of May like normal. That's just set up, it automatically does it. I honestly barely check this account except when I do these updates, which I just really love that because I don't have to worry about it at all. I just let it do its thing. It made these buys. It only bought 6 of the companies just because some of them were overweight, so I thought that was pretty cool. It put a lot into VGT, which I like. I like just a nice technology ETF like that. Then I did receive a awesome 1 penny from MasterCard, which is cool to see. I'm glad they don't give me any of those fractional scientific notation cents of dividends like they do at Robinhood. So let me know if you guys have any suggestions for the portfolio, because obviously you can see it hasn't been performing very well. I think the NASDAQ over the year, or since the start of the year, which is when I started this portfolio as well, the NASDAQ's up around 5%. My portfolio is down 11%. So that's a big difference there. But I think over the long term, most of these companies are going to do very well, and they should give me some nice returns. But it's just a little tough to see some of those negative numbers there, just because I bought in at the wrong time. And that's just sort of the experiment I'm trying with M1 Finance, just to see how I like it, just because I'm just letting it buy whenever I deposit money and not worrying about it, which I sort of like, because I don't have to pay attention to it, but also you don't really have as much control over what cost you get in at. So thanks for checking out the video. I'll leave a link right up here to my last portfolio update if you missed that, so you can sort of see the progress of where we've been before, and I'll leave a link to that in the description below. So thanks so much for watching, and I will see you guys in the next one.